In today's show, we're going to be discussing how the Bitcoin price can surge 500% to $55,000 amid rising institutional adoption. Forbes Crypto just tweeted, exclusive $10 billion asset manager Stone Ridge reveals 115 million Bitcoin position as a part of a larger plan. That's right, the CEO of Abra and former employee of the CIA and Goldman Sachs recently said that if only 5% of the liquid assets that the top 9 firms in the S&P 500 own were to enter Bitcoin, it would surge. He goes on to share 9 companies alone in the S&P 500 are sitting on close to $600 billion in cash and short-term investments. 5% of that moving into Bitcoin, or $30 billion, would likely 5x the price of Bitcoin given the lack of sellers. I'll be breaking this down for you in today's show. Also in today's episode, Max Keiser just tweeted this story. Bitcoin should be 5% of your investment portfolio, says Fidelity. Now this is a pretty big deal, as Fidelity is an asset management giant which controls over $1 trillion in assets. They just released this report. We're excited to share the second report in our Bitcoin investment thesis series. In this piece, we explore Bitcoin's role as an uncorrelated alternative investment that may provide portfolio optimization benefits. I'll be giving you some of the highlights from this exclusive report entitled Bitcoin's Investment Thesis, Bitcoin's Role as an Alternative Investment, right here in today's show. Also in today's episode, as Max Keiser predicted, a global hash war, a new frontier for the countries competing for the global domination of the hash power. Check this out. We have China clearly leading the pack, which controls over 65% of the monthly share of the hash rate. Below that, we have the United States, then Russia, Kazakhstan, Malaysia, and Iran. I'll be breaking this down for you in today's show. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and most all the major altcoins back in the red. But where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button, that's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. Let's kick it off by diving into today's top story of the day, how the Bitcoin price can surge 500% to $55,000 amid this massive institutional adoption we're witnessing right now. An increasing amount of Bitcoin is being accumulated by institutions. This much was made clear on Tuesday when Stone Ridge Asset Management revealed to Forbes it had picked up 10,000 Bitcoin, representing just 1% of its assets under management. You can see from this tweet here, exclusive $10 billion asset manager Stone Ridge reveals $115 million Bitcoin position as part of a larger plan. That's right, investors think that further institutional adoption of Bitcoin could result in prices going parabolic. Let's go BTC. It's time, isn't it? Now here's how Bitcoin could explode higher as more institutions adopt it. We have Bill Barhydt, the CEO of Abra and a former employee of the CIA and Goldman Sachs, recently said if only 5% of the liquid assets that the top 9 firms in the S&P 500 were to enter Bitcoin, it would surge. 9 companies alone in the S&P 500 are sitting on close to $600 billion in cash and short-term investments. 5% of that moving into Bitcoin, or $30 billion, would likely 5x the price of Bitcoin given the lack of sellers. So a Bitcoin currently trading above 11,000, that would put the Bitcoin price at $55,000 per BTC. Let me know when you feel that is most likely to happen. Do you think that could occur potentially here in the fourth quarter of 2020? Do you feel it will happen next year in 2021? Let me know in the comments right down below. Now checking out this tweet storm from the CEO of Abra. He wrote, at least 4% of Bitcoin, probably more, is now locked up in long-term holdings by institutional investors. If you don't get what's about to happen, then you're just not paying attention. Why does this matter? Read on. That was number 1 of 6. Here's the next. Corporate treasuries globally are sitting on trillions in cash. What we see now in Bitcoin is a tiny fraction of that, a barely measurable amount. And then he continues, 9 companies alone in the S&P 500 are sitting on close to $600 billion in cash and short-term investments. 5% of that moving into Bitcoin, or $30 billion, would likely 5x the price of Bitcoin given the lack of sellers. And he continues, a Fidelity report today cited the alternative investment market to be worth over $13 trillion. None of that money is in Bitcoin. Bitcoin today. Stone Ridge just revealed a massive 115 million Bitcoin investment and is now holding custody of over 1 billion worth of crypto. BlackRock is now managing 7.8 trillion of assets. What are the chances that 1% of that makes its way into Bitcoin within 5 years? That's close to $80 billion. Postscript, the Apple Card alone will likely be big enough to be a Fortune 1000 company within 24 months. That business competes head-on with Square. Chances that Apple starts to focus on Bitcoin? Question mark? And that's a very great question, right? And while this math may not add up in your mind, take fiat amplifiers into account. The amplifier is a concept for every fiat dollar that is invested into Bitcoin or crypto in general. The market cap of the space will grow by more than $1. Now, estimates suggest that the fiat amplifier is anywhere from 2 to 25 times, depending on what phase of the market cycle cryptos are currently in. In periods where investors are expecting upside, the fiat amplifier grows as investors don't want to sell their coins too early. Now, Barhydt's analysis of the institutional adoption situation comes as he's seeking to increase his personal exposure to Bitcoin. As reported by Bitcoinist previously, he said he's considering doubling the allocation to Bitcoin in my personal portfolio to 25%. That's right, explaining why he thinks this is a good idea. He pointed towards inflationary trends sharing, given the acceleration of currency inflation and the likely price inflation to follow. This seems like a better weighting than my current 12%. Touche. He added that the contacts he's spoken with say the returns in legacy markets such as equities are likely to be muted in the next 5 years. This trend may also affect the driving capital into alternative assets that may be able to generate healthy returns such as gold and Bitcoin. As you can see in his tweet right here, thoughts on Bitcoin allocation. I'm considering doubling the allocation to Bitcoin in my personal portfolio to 25%. Is this a good idea or is this allocation too high? Now, personally, I think it's a great, brilliant idea. You have influencers like Max Kaiser who tweeted this 5 days ago. I've had 80% of my balance sheet invested into Bitcoin since 2011. You guys are posting rookie numbers, and he tagged Michael Saylor, the MicroStrategy CEO, and Jack Dorsey, the CEO of Square, who just recently purchased 50 million in Bitcoin. And now for the $1 million question, what if these other major companies started investing 25% of their balance sheets or investment portfolio, such as Paul Tudor Jones, versus just 1%? What if they invested 80% of their balance sheet into Bitcoin? What would that do to the Bitcoin price? You already know, fam. Now, the comments he made are reminiscent of those made by a number of other investors in the space who have dramatically increased their exposure to Bitcoin amid an ongoing macro backdrop, including Raoul Pal, the CEO of Real Vision, for instance, has over 50% of his liquid net worth into Bitcoin. There you have it. How many of you have more than 50% of your investment portfolio into the king of all crypto? Holla at me in the comments right down below. And before I break down our next story of the day, Bitcoin should be 5% of your investment portfolio, says asset management giant Fidelity. But first, let's take a look at the overall crypto market. We can see Bitcoin barely in the green, up 0.16% for the day, trading at $11,265. We have Ether up 1%, trading at $381. XRP down 0.8%, trading just above 25 cents. Chainlink down almost 1%, trading just below $11. We have Cardano up 1.6%, trading at 11 cents even. We have BNB up 1.4%, trading just above $30, and Miss Litecoin up 2.2%, trading just above $50. So as you can see, most of the market currently in the green, but like 2 minutes ago, most of the market was in the red. So it's been a constant battle between the bulls and the bears. Let me know if you're bullish or bearish on the king of all crypto. All right, now let's break down our next story of the day. Fidelity says, we are excited to share the second report in our Bitcoin investment thesis. In this piece, we explore Bitcoin's role as an uncorrelated alternative investment that may provide portfolio optimization benefits. And I'll include this report in the show notes below the video in the description, entitled Bitcoin Investment Thesis, Bitcoin's Role as an Alternative Investment. And we have a lot to cover regarding the hash war story, so I'm just going to give you a quick summary of what's included in this report, and you could go on and read it for yourself. But ultimately, Fidelity's Bitcoin investment thesis research shows that Bitcoin has extremely low correlation with other assets like stocks and gold. The report considers the situation of an investor allocating 5% of a multi-asset portfolio into Bitcoin. And we already know if these major companies start allocating 5% versus 1%, the Bitcoin price is likely to soar, which could realistically put the Bitcoin price at $55,000 per BTC. And Fidelity has been a consistent supporter of Bitcoin as well as other digital assets. This is a pretty big deal because they control over $1 trillion in asset management. So what if a company like this was to allocate 5% of their reserves into the king of all crypto? That would send the Bitcoin price parabolic. And before I break down our next story of the day and we discuss this global hash war, first let's take a look at the overall crypto market. We can see Bitcoin market cap sitting at 360 billion with 72 billion in volume in the past 24 hours, and current BTC dominance is 58.5%. And now taking a look at the top gainers within the top 100, we have BBC coin up 25%, trading at 47 cents. Reserve Rights up 8%, trading at 1 cent. Hyperon up 5.5%, trading just below 20 cents. Quant up almost 5%, trading just below 11 bucks. And Ocean Protocol up 4.5%, trading at 37 cents. Below that, we have Bitcoin Cash, Maker, Golem, Arger, and Monero. And now checking out the biggest losers within the top 100 in the past 24 hours. We have PumaPay down 14%, trading at 0.0002. Arweave down 11%, trading at $4.20. Then we have Yearn Finance down 10%, trading just below 15,000. Storj down 9%, trading at 55 cents. Avalanche down 7%, trading at $4.18. And Zilliqa down 7%, trading at 1.8 cents. Now, out of this list of the biggest gainers and losers in the top 100, which altcoins in particular are you most bullish on right now? Drop me a comment right down below. And now checking out the BitMEX margins, we can see the bears are barely in control, leading with about 7 million in superiority in the last 24 hours, with shorts barely leading 50.5% versus 49.5% longs. Are you currently bullish or bearish on the king of all crypto? Holla at your boy. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 53 neutral, yesterday a 56 in greed, last week a 43 in fear, and last month a 39 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, and before I break down our final story of the day and we discuss global hash wars, a new front for countries, first I want to remind you to smash that show more button right below the video in the description for a detailed analysis of what's going on in the market. This goes for all 565 plus videos right here on my YouTube channel. Also some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video, or if you're listening or tuning in on a different platform outside of YouTube, the direct YouTube link is cryptonewsalerts.net. You can also find us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes, simply by clicking on the link. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes. And for those of you active on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a private crypto Telegram chat. To join it, click this link and you'll automatically be added. And I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day. The concept of fiat money can be said to be one of the best inventions of mankind. However, that resulted in a huge wealth gap amongst the nations and people around the world. It's no secret that the world's top 10% richest hold 85% of the total wealth, whereas the remaining 90% of the people only own 15% of the total wealth. Then came the year 2009, and we saw a rise of a new concept of money, a crypto called Bitcoin. Have you ever heard of it? With the invention of crypto, we've stepped into a brand new world. The first crypto, Bitcoin, revolutionized the whole concept of money, you can say that again, as well as how we transact with or without the need of a third party in a trustless system. That's right, Bitcoin cuts out the middleman. That's why you gotta love it. And with the unprecedented rise of Bitcoin's value in the past decade, the countries around the world started noticing the remarkable effects of cryptos on the global economy. That opened a new gate, the fight for Bitcoin dominance. Hence, the hash wars, as Max Kaiser has been predicting for quite some time. To understand what the hash rate is, basically it's a measure of processing power of the Bitcoin network. So whoever has more processing power on the Bitcoin blockchain network has more dominance over Bitcoin and its future. Therefore, the so-called so-called hash war continues over the future of Bitcoin. Since the birth of Bitcoin in 2009, digital currencies have become commonplace with millions of traders mining and trading the crypto. Digital currencies keep soaring high as the world continues to venture into the digital age, and the global revenues for e-payment reaching a record of $1.9 trillion so far. There have been ongoing rumors that the Bitcoin price will hit $500,000 because of the experts' belief that the United States might start a hash war with Iran and Venezuela for control of digital currency. In a TV episode in June, Max Keiser predicted that the Trump administration might embrace Bitcoin due to Tehran and Venezuela's dominance in the control of the Bitcoin hash rate. It is believed that Iran has already got 3% of the global hash rate, with Max Keiser of the opinion that Venezuela will get 3 to 5%. It seems to have triggered the United States in a fight over the control of Bitcoin. That's right, going one step ahead, Iran has also made plans to sell electricity to crypto miners straight from their power plants. That's right, according to a report just recently published, Iran's government has given the nod to the biggest thermal power plant holding company to let crypto miners buy electricity from 3 of its power stations. So the ongoing hash war between powerful nations continues. The past few decades have seen fierce battles over the control of global economy between powerful nations. Great power competitors pit the United States of America, China, and Russia against one another. That's pretty common if you turn on the news. And FYI, I've spent 13 months in China. Turn on the China news, you're going to hear completely different news than what you hear in the United States, and I'm sure it would be the same in Russia, with each nation state competing for more influence and power against one another. Now, the evolution of digital currency has reshaped the fight, with each country creating a separate state-backed crypto to challenge another economically. It seems to be apparent with the look of the ongoing competitive trade advantages via the global market manipulations, the potential for economic vulnerability due to the reliance on digital currencies, and even the use of digital currencies specifically for illicit activities. I think people are flocking to crypto because we no longer trust government. Government threw us overboard a very long time ago. And now for the top contenders of this hash war, the adverse effect of the COVID-19 pandemic on different economies has led to many countries considering already developing state-backed digital currencies, with the US and China and Russia, and to the lesser extent Iran amongst those at the top of the process. These countries' developments have led to a cold hash war, given the fierce ongoing military conflicts and the fact that the digital currencies have the potential to become the backbone of an individual nation's economies. That's a fact. As per data available until April this year, China has been leading the hash power race with control of over 65% of the monthly share of hash power. All the world is lagging far behind China when it comes to the total hashing powers of nodes of the Bitcoin network. The only close contenders are the United States, Russia, Kazakhstan, and all 3 of them controlling less than 7.5% of the monthly share. As we can see here in this graph, China obviously leading the pack with 65% control of the hash power. Then we have United States at 7.2%, followed by Russia at 6.9%, followed by Kazakhstan with 6.17%, followed by Malaysia at 4.3%, followed by Iran with 3.8%. First, let's talk about the hash war going on in Europe, and then we'll discuss the hash war going on in Asia. Europe and the United States are the largest markets for exchange activities, with the majority of the world's stock of Bitcoin and others held in this region. If you take a closer look at the European crypto market, you'll see different pictures. We witnessed the crash of crypto in spring. However, Bitcoin Euro rebound has been sluggish so far, and sluggish behavior is not only on Bitcoin. Other popular currencies like Ethereum and Litecoin are also having a hard time rebounding from the initial crash. According to experts, sluggish behavior can be attributed to the European investors' less interest in investing into crypto, unlike their American counterparts. It's been that there is a low demand for crypto in Europe. Interesting, right? Another possible explanation is the high cost of mining Bitcoins in the EU due to higher energy costs and strict regulations. That's a good point. Now for the hash war in Asia. East Asia is the world's largest crypto market, accounting for 31% of all crypto-related transactions in the past 12 months. Whoa. According to demographics by Chainalysis, East Asia has received $107 billion worth of crypto over the previous 12 months, with China controlling 65% of Bitcoin's global hash rate. Although East Asia is soaring high in Bitcoin mining, it is also crucial to note some fierce hash wars going on in different countries in Asia. We also see another twist in India concerning crypto. There was controversy when the country's Reserve Bank declared that banks would be stopped from serving crypto-focused companies, a move that experts believe would affect so many exchanges. However, the Indian Indian Supreme Court revealed the Reserve Bank's ban by declaring it as disproportionate and unconstitutional. And in Thailand, the government has created guidelines and laws to protect consumers while ensuring that the country is soaring high on the global stage. The country has put measures in place which will enable crypto firms to get a license to operate in the country. However, those who flaunt the order risk jail sentence or a fine, and that leads us to there being no cryptocurrency regulation in Japan, which means that regulators allow to pay for goods and services using BTC. However, crypto exchanges are licensed and undergo constant audits. So there you have it. You can see it's a mixed bag with cryptocurrency around the world. Some governments seem to be embracing it while others are not. And as you can see once again with this graph, you can see China clearly leading the global hash rate war. Who do you think is going to win in the end? Do you think United States will step it up and be some competition? Or do you think we will forget about crypto and watch these other countries pass us? Let me know your thoughts in the comments right down below. And now for a quick recap of what I covered with you here in today's show. I shared how Bitcoin could surge 500%, reaching $55,000 per BTC amid rising institutional adoption. As I shared right here, 9 companies alone in the S&P 500 are sitting on close to $600 billion in cash and short-term investments. 5% of that moving into Bitcoin, or $30 billion, would likely 5x the price of Bitcoin given the lack of sellers. And this is coming from the Abra CEO. I also shared with you Max Kaiser allocated 80% of his overall balance sheet investments into Bitcoin since 2011, and these other cats are posting rookie numbers. That's a fact. As you can see here, exclusive breaking news, $10 billion asset manager Stone Ridge reveals 115 million Bitcoin position as part of a larger plan, which will probably lead other major institutions to follow. Also in today's show, I shared with you the fact Bitcoin should be at least 5% of your investment portfolio, says Fidelity, and I shared with you their latest report, which you can find in the show notes below the video in the description. And we also discussed a global hash war. As we can see right here, we have China leading the pack, controlling 65% of the hash power, with the United States behind with only 7%. Who do you think is going to win this global hash power race? Let me know in the comments below. And also, let me know where you feel the Bitcoin price is likely to go from here. Do you think we'll continue climbing and retest that critical $12,000 resistance, or do you feel we'll break back down, dropping below 11,000? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description and register for this free system entitled OPM Wealth. You'll be glad you did, and I look forward to seeing you on tomorrow's episode. Peace.